please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
On that note, let's just get back to some more fundamental opinion. Earlier in the day, we caught up with Mihir Vora, Director and CIO at Max Life Insurance, to understand what he thinks of the sell-off in the NBFC universe and whether he would buy in.
There's been lots of rumor mongering and all sorts of messages flying around in the NBFC space, and probably it's a culmination of all the events that we saw with the rating downgrade, etc. And the financial markets, especially the credit markets, are not that liquid to start with. And when you have a little bit of trust deficit, then things tend to get exaggerated very fast. But in the NBFC space, our view has been positive on the fundamentals. We do believe that they serve a purpose. They have their own strengths in terms of business models, in terms of the niche segments that each and every NBFC has identified, and it is making good margins. And pricing power is not a problem, given the fact that you have a large portion of the banking system, especially the PSU banks, not lending to a lot of these segments. So I don't think margins were an issue. Pricing power is an issue. Rising interest rates, again, as I said, not an issue, because you can pass on, NBFCs were able to pass on the rate hikes and the interest rate regime. So I think it's been more of the trust kind of a trust deficit kind of situation rather than anything else in this space. Having said that, in our portfolios, we were underweight in the space because it had become too hot. Valuations had become too expensive to start in the last few months after almost 3 to 4 years of bull run. So we were underweight, but with this kind of correction, probably it's time to start looking at it.
What about the overall market texture? We have had very volatile market. From the top, of course, we've fallen quite a bit, but before that, we had a big rally as well.
So the backdrop is turning a bit weak, I would say, and the biggest factor is oil. Oil, unfortunately, is not going below 80 at the Brent level, and that's impacting the currency and even the fixed income markets to an extent. So I think if you look at just India, I think the backdrop versus, say, 3 or 4 months back has definitely turned weaker. And this is kind of feeding into flows. We have seen positive flows into mutual funds, but the rate of increase has come down. We are seeing a little bit of deceleration in the positive flows. That combined with the FII flows continuing, outflows continuing from emerging markets as well in India, makes the situation a bit weak, I would say.
Do you think this market goes significantly lower before it finds support? I mean, do we see 10,500?
Well, 10,500 is not very far in terms of percentage points, maybe 4 or 5%. That's a normal correction, I would say. So if that happens, it should not be considered as anything extraordinary, I would say. Yeah.
Okay. So as an investor, what are the places that you would put fresh money to work? I mean, maybe not now, but through the course of the next couple of months, would you look at consumption? Because so many of those stocks have fallen. Is IT still a good hiding place? What would your sectoral preferences be?
Consumption is definitely a theme that will hold up. We are in the pre-election year, so I don't think the government will cut down on the revenue expenditure parts, so which probably may lead to a bit of a higher fiscal deficit than envisaged, but that probably is to be expected in an election year. The monsoons have been good, so I think the rural economy should get a tailwind in that aspect. So government spending plus a good monsoon means that consumption should continue to be a good factor. Plus the government order book led companies in the affordable housing space, in the road construction, and some of the infra and urban infra led projects are also seeing good inflows in orders. So I think that space, which is the construction and EPC space, which is more linked to the affordable housing and government theme, should continue to do well. If oil continues to remain the way it is and goes up further, then of course we would be underweight on financials and go overweight on the exporters. We are already overweight on exporters, but probably go more overweight on exporters.
Mihir, you briefly mentioned that some of these companies that are getting government orders is what you would look to invest into. What are your thoughts on names like, I mean, not getting into specific names, but what are your thoughts on spaces like defense, names like BEL?
So in the defense space, it's been a very painful long wait, I would say. We did have some exposure in this segment, but it just takes too long for orders to materialize, and then after materializing, the execution times are long. So as of now, we don't have. We've been kind of we haven't had such a great experience in this space because, as I said, it's been too long a wait.